Inflation is not your friend, especially if you're a woman. Find out why on Smart Money. Welcome in. We appreciate you stopping by Smart Money. I'm Pat Boyle along with Julia Anderson. And Julia, it sounds like it's your belief that inflation is the enemy of long-term investors, especially women. Ugh, tell me why you say that.
Well, it is the long-term enemy of investors in general, but particularly women, because women tend to save less for retirement and they tend to be a little more conservative about where they put their money. So right now, with inflation heating up in the economy, we've been kind of perking along at 2% inflation in terms of the cost of living increases. And now this last report had it as 6%. That's a big jump. And of course, you can go to the grocery store. You know, we've talked about a lot of different ways you can see inflation in the economy. Food is more expensive. Cars are more expensive. Everything is more expensive right now. So the bottom line is, if you've got money in a conservative savings account, you're actually losing money on that because inflation is eating into the purchasing power of that cash.
What are economists saying? Do they agree on what's happening, or are there differing opinions?
I think they all expected to have more inflation as the economy recovers from the pandemic. And then, of course, the Biden administration has thrown a lot of money into the economy to help people get back on their feet and pay for things. So right now there's a huge amount of money out there and the supply demand ratio is a little out of whack. So prices are going up. In the longer term, I think the Fed, the Federal Reserve Bank, is expecting that inflation will start to taper off by the fall. And that's still an unknown, but that's what they're hoping for, because 6% is really more than a lot of us can handle.
It's not just women who are most vulnerable, it's also retired people and conservative investors, right?
For sure. I mean, anybody who's saving for the long term has to keep in mind that inflation at 2%, which is really acceptable for most economists, is going to take $20 out of your $1,000 of savings every year. So over a 10-year period, your, let's say, $200,000 401k account is going to lose 20% of its buying power. And that is something you need to keep in mind as you plan for the long term and plan for your savings. You've got to have earnings in your retirement accounts that are at least as good as inflation. Otherwise, you're actually losing money, and that safe money isn't really so safe.
Boy, Julia, I have to say I'm guilty as charged. I have some money sitting in a savings account, which is, not gaining anything and losing, as you say. But I also don't want to switch it to something else where I may have it locked up for 5 to 10 years. So is there another thing I can do?
Well, I think what you're saying when you say lock it up, you're going to get a higher interest rate, but you have to leave that money alone for 5 years to get the higher interest rate. Is that what you're saying?
Yeah.
It's again about risk and reward. You've got to take a little risk. And if you don't want to have your money locked up, you're going to have to look at other investment options. And obviously, the easiest one for me is the stock market and equities. Either put the money into a 500 index fund, which is real low cost, and let it go with the market and reinvest the dividends, or look around for some other more flexible short-term bonds, for instance. There's some other ways you can make a little more with that money without feeling like you're risking too much of it. But locking it into a 5-year low interest rate at this point, I think it would be a bad idea, because we know that interest rates likely are going to go up at some point. Not soon, but maybe in the next couple of years.
You talked about risk versus reward. Is there a sweet spot? Is there a middle ground? And is it the same for everybody, or does it differ?
Well, the formula that investment advisors like to use is 60-40, 60% stocks and 40% bonds. That's pretty conservative, and you've got some diversity there. Some people think that in this current market, you need to be more heavy into the stock market and cut back on the bonds, because when interest rates go up, bonds actually go down in value. So if you're not sure about all this, talk to somebody, buy an hour of their advice time if you want.
Is it possible at all to beat inflation?
Oh, yeah. You can beat inflation with the stock market. Historically, over the last 50 years, if you track the US stock market, it's performed an average increase in value of 5% a year. And with inflation at 2%, you're making 3% on your money by being in the stock market. And in some years, it's been better than that. Lately, it's been a lot better than that in terms of stocks. So yeah, there are a number of ways you can beat inflation, but it's something people who are planning for the long term and retirement really need to think about.
How long are these conditions going to last, and when do you think the Feds will raise interest rates?
It really depends on whether this 6% inflation that we're experiencing right now begins to ease off. And what the Fed is saying that they expect that by fall. There's some people who are skeptical. We just talked today with somebody who's talking about the car industry and how things are not going to even out in the car industry for more than a year, maybe 2 years before prices begin to level out a little bit. So there's a lot of factors at play in terms of what's making our economy run. But ideally, the Fed wants it to be more in the 2% inflation rate, not the 6%. So if they can't get it back down, they're going to start raising interest rates. And that will create a little more anxiety and turmoil.
Well, I will continue to watch the two markers I always set my eyes on, and that is the price of gasoline and the price of chicken thighs. I've seen them as low as 88 cents a pound, but they're going up. And so I'll keep my eyes on the chicken thighs and the gas, and we'll see what happens. Thank you, Julia.
Well,
she's our expert. Julia Anderson, this has been Smart Money. Thanks for watching.
For more information, go to my website at 60andsingle.com.